Hello everybody, this is Mike Prey with Keller Williams Realty, here to talk to you a little bit about significant things that happened in the market through the month of August and as we go into the month of September. I want to talk to you a little bit about something that I hear often as I'm talking to people about real estate now. Many people are waiting. They're waiting for the prices to go down, they're waiting for the interest rates to go down before they get into the market. And in some cases that's a good idea. It's not the time to get in for everybody, but there are a lot of people that are missing out on a lot of great opportunities for waiting. Let me give you an idea of what I mean. In the month of June, the median sales price was $440,000, or July, the median sales price was $440,000. So let's use that as a sales price. If you were to buy a $440,000 home and put 10% down, your principal and interest payment at an interest rate of 6.81 would have been $2,584. And so if you were waiting for the interest rates to go down from 6.81 to buy in August at the same priced home, you would have been looking at an interest rate of 7.18%, which is an increase of 0.37, and your principal and interest portion of your payment would have been $2,682. So by waiting, you would have had an increase of $98, almost $100 in your payment. Now, a lot of people are waiting because experts are saying the prices are going to go down. Some experts are saying prices are going to go down, and some experts are saying actually we're predicting earlier in the year that we would see interest rates go up, that we would have relief, start seeing relief in the end of the summer and as we go into fall. Well, we've seen the interest rates go up, and we've seen the prices continue to go up in that time period. A couple of years ago, back in 2021, I had a client that wanted to get into the market. And that's when the interest rates were starting to go down, but the prices were starting to go up. And that worried him. But some of the experts were saying that was only going to be a short-term thing and that prices would come back down. So he decided to wait. He didn't get in the market. He decided to wait. And so we waited through 2021 when values increased in double digits in the DFW area, and also through 2022 when values increased by double digits, and now the interest rates have gone up also. So had he taken action back in 2021, he'd be sitting on top of a lot of equity with a very good payment. So there is a cost that's associated with waiting. Now, as I said, that varies for everybody, and everybody's situation is different. But if you're thinking about getting into the market, or you want to move up or something like that, or you're having to sell your home and buy another property, get with me and let's talk about your situation and look at your specific needs and see what is the best thing for you to do. But waiting often has a cost associated with it. Another thing, if you're looking to buy, especially this time of the year, a good place to look is with builders. Builders are coming to their year end. We're starting to see greater incentives for purchasing homes, particularly those that are already under construction and that are inventory homes. Builders are also helping to mitigate the high interest rates. Many of them are buying down the rate for the buyer, so that when you purchase that home, you're buying it at a lower interest rate. So those are some things to consider, and I can help you navigate that with my background in construction management, and marketing. I can help you, and the builder pays my fee for helping you. So if you're thinking about a new home, give me a call and let's explore what's available for you. So to look at what has happened, actually happened in the month of August, the homes closed again were down month over month about 5%. For the year, they were down 17%. So we're seeing a continued trend of fewer and fewer homes closed, and that's mostly a function of inventory. The median sales price actually dropped fairly dramatically month over month by 13.5%. It was at 380,000, down from 440,000 last month. Something to know about sales prices versus interest rates. Sales prices trend upward historically over time. They historically double every 20 years in price, and so if you look at price trends, you'll see highs and lows month to month or year to year, but the general trend is upward. Interest rates, on the other hand, tend to bounce around. They're able to be manipulated by the Fed. They're very sensitive to other market conditions and things that go on in other parts of the world, so it's hard to really predict what those are going to do. But the price eventually is going to go up if the historical figures hold true, and so you can be confident purchasing. You can't change the price after you purchase, but you can change the interest rate. If the interest rate falls, you can refinance and take care of it that way. So those are some things to keep in mind. The days on the market were up by 2 days at 24 days on market to get something under contract, and that's fairly flat over last month. Fairly flat over last year. It was up 4 days over last year. Last year it was taking 20 days, so that's about the same. The available inventory was down 4.9%, and that continues a trend of inventory homes available being lower. From last year, they were down 23.7%. So we're getting, continuing to be low on inventory. The rate of sales is decreasing. In other words, it's taking a little longer for homes to sell. The month of selling fewer homes, the months of inventory was up 1.13 month over month to 3.36 months, and that's up about a half a month from last year, which was at 2.96 months. So the rate that the homes are selling is decreasing. New listings were down over last month by 17.9%. They were down for the year by 9.7%, so fewer homes were put out there on the market. The interest rates went up about 0.37%. For the month, they ended the month at 7.18%. For the year, they were up 1.63 basis points. Last year at this time, the interest rate was about 5.55%. So you can see the interest rates are still continuing to rise. Now, there are things that we can do to mitigate that and look forward to perhaps interest rates falling, but interest rates are very unpredictable. But there are things that we can do to help you to get into the market at a reasonable rate. Showings were down by 27.6% over last month. They're often down. They're often lower at this time of the year, so it's kind of seasonal. But that's a little more dramatic than what we usually see. Last year at this time, the showings are about 3.9% higher than last year at this time. So that speaks to demand. There are people out there looking for homes. When we put homes on the market, if they're priced right and in good condition, they sell. It takes a little bit longer for them to sell. We're just not seeing the dramatic price increases and people overpaying that we were seeing a year ago or even a year and a half or 2 years ago. Well, that's the update for what's happened through August. Like I said, the market is very volatile, and the situation is not the same for everybody. So if you want to know if this is a good time to go forward with your real estate goals, or if you have a specific situation that you'd like to talk over and see how best to handle it, please give me a call at 469-446-0234. You can email me at mikepray2@gmail.com. If you're watching this on social media, you can message me and we'll get together and discuss your specific situation and see how we can help you reach your real estate goals. Well, thank you. I hope you're all having a great fall football season, all the other seasons coming up, and I look forward to talking to you next month. Bye.